Welcome to our deep dive into the cryptocurrency market of 2024, an exhilarating year marked by unprecedented growth, surprising downturns, and lessons that every investor should take to heart. Whether you're a seasoned trader, a curious enthusiast, or someone looking to make their first investment, this video is your ultimate guide. We will analyze every aspect of 2024, so stay tuned because there are so many valuable lessons we can take out of it. And at the end, we'll unveil the top 5 cryptocurrencies you absolutely need to watch for 2025. Trust me, you don't want to miss this one. Before we dive in, don't forget to hit the like button and subscribe to our channel for the latest insights into cryptocurrency, AI, and financial strategies. Turn on notifications so you never miss an update. With the rapidly changing crypto world, staying informed is your best strategy to succeed. January 2024 was a landmark moment for cryptocurrency as the U.S. Securities and Exchange Commission, SEC, finally approved spot Bitcoin exchange-traded funds, ETFs. This approval marked the culmination of years of advocacy from crypto enthusiasts, institutional investors, and financial innovators who had long argued that a spot Bitcoin ETF was essential for bridging the gap between traditional finance and the burgeoning world of digital assets. Unlike futures-based Bitcoin ETFs, which had been available since 2021, a spot Bitcoin ETF allows investors to directly buy and hold Bitcoin without needing to navigate crypto exchanges or wallets. This direct exposure addressed key pain points for institutional and retail investors alike: accessibility, security, and regulatory clarity. The SEC's decision triggered an immediate market reaction, signaling to traditional finance players that cryptocurrency had entered the mainstream. For institutional investors, ranging from pension funds to mutual funds, this approval removed a significant barrier to entry. No longer was investing in Bitcoin a fringe activity relegated to tech-savvy retail investors. It was now a legitimate, regulated option for diversifying portfolios. With the approval of spot Bitcoin ETFs, institutional money began flowing into the market at an unprecedented rate. By March 2024, Bitcoin had surged to an all-time high of $70,000, a staggering 67% increase from its starting price of $42,000 at the beginning of the year. The reasons for this meteoric rise were multifaceted. Institutional FOMO, fear of missing out. The approval of spot Bitcoin ETFs by the SEC in early 2024 created an unprecedented wave of institutional FOMO. For years, traditional finance players like pension funds, mutual funds, and hedge funds had watched Bitcoin's rise with a mix of skepticism and curiosity. However, the launch of spot ETFs removed a critical barrier: direct exposure to Bitcoin without the complexities of custody, wallets, or navigating crypto exchanges. Institutions understood the significance of being early adopters in a newly legitimized asset class. Analysts compared this moment to the introduction of gold ETFs in 2004, which revolutionized gold trading and attracted billions in investment within its first year. By 2024, institutions feared missing out on similar exponential growth opportunities with Bitcoin. Adding fuel to the FOMO fire were high-profile endorsements from major players like BlackRock and Fidelity, which aggressively marketed their Bitcoin ETFs as essential components of a diversified portfolio. Financial news outlets were flooded with stories of hedge funds allocating up to 5 to 10% of their portfolios to Bitcoin ETFs, citing its potential as a hedge against inflation and a store of value in a volatile global economy. A domino effect unfolded as even traditionally conservative firms, such as state pension funds and university endowments, began allocating to Bitcoin. This rush of activity was further amplified by the psychological impact of Bitcoin's rapid price appreciation, which validated the urgency of institutional participation. The fear of falling behind competitors or losing client trust pushed institutions into the market at record speed. Increased liquidity. One of the most immediate and profound effects of spot Bitcoin ETFs was the surge in market liquidity. Liquidity, the lifeblood of any financial market, ensures smooth transactions, tighter bid-ask spreads, and reduced price volatility. Before 2024, Bitcoin's liquidity had been heavily reliant on retail traders and crypto-native exchanges, which, while growing, lacked the depth of traditional markets. The introduction of spot ETFs changed this dynamic almost overnight. By allowing institutional capital to flow seamlessly into Bitcoin without the friction of buying and securing the asset themselves, ETFs acted as bridges between traditional finance and crypto markets. Asset managers like BlackRock reported billions in inflows within weeks of launch, with their ETFs trading at unprecedented volumes. This surge in liquidity had a stabilizing effect on Bitcoin's price, reducing the extreme volatility that had long been a hallmark of crypto trading. With more participants in the market, the risk of large price swings due to whale activity, individuals or entities holding massive amounts of Bitcoin, decreased. Retail investors also benefited, as improved liquidity meant easier entry and exit points at fairer prices. Furthermore, increased liquidity opened the door for more sophisticated trading instruments, such as options and futures, to gain traction. These tools attracted even more institutional participation, creating a self-reinforcing cycle of liquidity and stability. For Bitcoin, this marked a significant step toward its acceptance as a mainstream financial asset. A global ripple effect. The SEC's approval of spot Bitcoin ETFs was not just a US milestone. It sent shockwaves through global regulatory landscapes. Countries that had been hesitant to approve similar products suddenly found themselves under pressure to keep up with the US in the race to legitimize crypto investments. In Canada, regulators fast-tracked additional approvals for Bitcoin ETFs, building on their leadership in launching the world's first Bitcoin ETF in 2021. This time, Canadian institutions ramped up their investments, buoyed by the US market validation. In the European Union, major financial hubs like Germany and Switzerland saw a renewed push for crypto regulation reform. The European Securities and Markets Authority, ESMA, began expediting applications for Bitcoin ETFs, focusing on balancing innovation with investor protection. By mid-2024, several European ETFs had launched, enabling EU-based institutional investors to diversify their portfolios with Bitcoin. Singapore emerged as a key player in the Asian market, leveraging its reputation as a forward-thinking financial hub. The Monetary Authority of Singapore, MAS, announced plans to approve Bitcoin ETFs by Q3 2024, prompting significant interest from Asian investors and family offices. This global acceptance of Bitcoin ETFs wasn't just about regulatory approval. It signaled a shift in how Bitcoin was perceived as an asset. By the end of 2024, the ripple effect had extended beyond Bitcoin ETFs. Global regulators began considering approvals for spot Ethereum ETFs, recognizing the growing demand for exposure to Ethereum's burgeoning ecosystem. These moves highlighted a broader trend. Crypto assets were no longer a niche. They were becoming a core part of the financial infrastructure worldwide. This global embrace of Bitcoin ETFs underscored a critical takeaway. The legitimization of crypto as a financial asset was now a coordinated worldwide effort. Investors and institutions alike began viewing crypto as a permanent fixture in the global financial system, rather than a speculative fad. This historic rally solidified Bitcoin's role as a store of value and a hedge against inflation, particularly as economic uncertainty persisted. Headlines declared Bitcoin's rise as a new chapter in financial history, while analysts predicted that this was just the beginning of a broader crypto adoption wave. While Bitcoin stole the spotlight in early 2024, Ethereum's steady climb highlighted its unique position as the backbone of blockchain innovation. Starting the year at $1,800, Ethereum's value grew by 47%, reaching $2,050 by early November. Its rise was driven by a combination of technical advancements, increasing adoption of decentralized finance, DeFi platforms, and renewed interest in non-fungible tokens, NFTs. Ethereum's dominance in the DeFi sector was a key factor in its growth. The total value locked, TVL, in Ethereum-based DeFi platforms surpassed $100 billion by mid-2024, with protocols like Aave, MakerDAO, and Uniswap leading the charge. These platforms offered decentralized alternatives to traditional banking services, such as lending, borrowing, and trading, all powered by Ethereum smart contracts. Ethereum's role as the primary blockchain for NFTs was reinvigorated by innovative projects like Blur, an NFT marketplace that prioritized speed and user incentives. Blur attracted both creators and collectors with its robust liquidity and user-friendly interface. Its growth mirrored a broader resurgence of the NFT market, as artists, brands, and influencers increasingly used NFTs to engage audiences and monetize their work. Layer 2 technologies like Arbitrum and Optimism significantly reduced transaction costs and increased Ethereum's throughput, addressing long-standing scalability issues. These advancements made Ethereum-based applications more accessible to a broader audience, driving adoption across sectors. Post-merge, Ethereum's transition to proof-of-stake (POS) continued to attract institutional interest. Companies like Coinbase and Kraken expanded their staking services, allowing institutions to earn passive income while supporting the Ethereum network. This created a virtuous cycle of adoption, with more investors holding and staking Ethereum, reducing its circulating supply and boosting its price. The early months of 2024 illustrated the growing divide between Bitcoin and Ethereum's use cases, yet also emphasized their complementary roles in the crypto ecosystem. Bitcoin solidified its status as a digital store of value, akin to gold, while Ethereum positioned itself as the infrastructure layer for blockchain innovation. Both assets benefited from the increasing accessibility of cryptocurrency investments, driven by regulatory clarity, institutional adoption, and technological advancements. Their combined success underscored a critical lesson for investors. Diversification within the crypto space is key to capitalizing on its dynamic and rapidly evolving opportunities. By the end of Q1 2024, the cryptocurrency market had set the tone for a transformative year. Bitcoin and Ethereum's successes not only captured headlines, but also reinforced the importance of staying informed and adaptable in a rapidly changing financial landscape. For those paying attention, the early months of 2024 were a call to action, an opportunity to engage with crypto in new and impactful ways. This momentum set the stage for further developments in the months ahead, as the broader crypto ecosystem continued to evolve. Whether you were an investor, developer, or enthusiast, the lessons of early 2024 were clear. The time to act was now. 2024 was also a year of regulatory clarity. The European Union implemented MiCA, Markets in Crypto Assets Regulation, which provided a much-needed framework for crypto compliance across the continent. This regulation boosted confidence among institutional investors, especially in assets like Ethereum, which benefited from DeFi's cross-border nature. Meanwhile, Asia became a hotbed of crypto innovation, with Hong Kong establishing itself as a crypto-friendly hub after years of regulatory uncertainty in the region. Despite these highs, the year wasn't without its challenges. January alone saw 38.9 million in losses due to Web3-related hacks, smart contract exploits, and phishing attacks. Projects like BonkDAO suffered devastating breaches, reminding everyone that security is paramount in the crypto world. One key takeaway? Never underestimate the importance of wallet security. Cold storage wallets like Ledger and Trezor became must-haves for serious investors, offering protection against these increasingly sophisticated attacks. While Bitcoin and Ethereum led the pack, other coins faced surprising downturns. Solana, which started strong at $24 in January, saw fluctuations throughout the year due to network outages and competition from Layer 2 Ethereum solutions like Arbitrum. Despite this, Solana ended the year on a positive note, trading at $32 in November, thanks to its active developer community and NFT innovations. On the other hand, meme coins like Shiba Inu and Dogecoin struggled to maintain their hype, with prices falling by 40% and 25%, respectively. These coins, driven more by community sentiment than utility, proved once again that speculative assets carry significant risk. One of the biggest surprises was the rise of projects focused on AI and blockchain integration. SingularityNet, AGIX, and Fetch.ai gained significant traction as businesses sought tools to optimize logistics, automate processes, and integrate AI into blockchain ecosystems. As exciting as 2024 has been, it has also taught us crucial lessons about what not to do. One of the most common mistakes? Over-leveraging. With Bitcoin futures trading becoming more accessible, many retail investors succumbed to the temptation of high-risk leverage, only to face liquidation during market corrections. Another critical error was chasing hype without research. FOMO, fear of missing out, led many investors to buy into meme coins or unvetted projects, resulting in significant losses. The key takeaway? Always prioritize due diligence and long-term value over short-term speculation. Navigating the crypto market isn't just about luck, it's about strategy. First, diversify your portfolio across high market cap coins like Bitcoin and Ethereum and emerging projects with strong fundamentals. Second, use tools like CoinGecko and Glassnode to analyze market trends and on-chain data. Lastly, never underestimate the power of dollar cost averaging, DCA. By investing small amounts regularly, you mitigate the risks of market volatility while steadily building your holdings. As we approach 2025, the cryptocurrency landscape continues to evolve at an unprecedented pace. The journey from Bitcoin's all-time highs in early 2024 to the steady advancements across blockchain ecosystems has been nothing short of remarkable. Now, let's dive deep into the top 5 cryptocurrencies for 2025, the projects that are poised for explosive growth and long-term impact. So let's break down what makes these 5 cryptos the top contenders for 2025. 5. Polkadot. Polkadot isn't just another blockchain, it's the backbone of blockchain interoperability, enabling different networks to communicate seamlessly. As of 2024, Polkadot has solidified its reputation as a developer-friendly platform, with projects utilizing its Parachain technology to unlock new levels of scalability and customization. One of Polkadot's most significant advancements has been the rollout of asynchronous backing, an upgrade that drastically reduces block times and increases the number of transactions per second. This positions Polkadot as a leader in blockchain performance, especially for projects requiring high throughput. Polkadot's ability to connect specialized blockchains has attracted major partnerships in industries ranging from supply chain logistics to decentralized finance, DeFi. Its Web3 foundation continues to support groundbreaking projects, making it a hub for innovation. As we move into 2025, Polkadot's unique architecture and developer-focused approach are likely to drive its adoption further, making it a strong contender for explosive growth. 4. Cardano, ADA. Known for its slow and steady development approach, Cardano has consistently focused on delivering a secure and sustainable blockchain solution. Unlike many competitors, Cardano's commitment to peer-reviewed research and methodical upgrades has earned it credibility, particularly in emerging markets. 2024 saw Cardano partner with governments and institutions in regions like Africa and Southeast Asia, bringing blockchain technology to sectors such as education, healthcare, and agriculture. These partnerships highlight Cardano's unique focus on real-world utility, differentiating it from purely speculative projects. One of the most anticipated developments for Cardano in 2025 is the continued expansion of its Hydra Layer 2 scaling solution, which promises to dramatically increase transaction throughput while maintaining low fees. This positions Cardano as a key player in delivering scalable solutions for decentralized applications, dApps. For investors looking at long-term growth potential, Cardano's mix of technical rigor, global partnerships, and commitment to sustainability makes it a standout pick. 3. Solana, SOL. Solana's journey hasn't been without its challenges, including network outages and scalability concerns. However, its low fees and lightning-fast transaction speeds have solidified its reputation as a favorite for NFT marketplaces and DeFi platforms. In 2024, Solana doubled down on its efforts to enhance network reliability, rolling out updates to improve uptime and stability. These efforts paid off, as Solana became a go-to choice for developers looking to build applications that require high performance and low costs. One area where Solana continues to shine is NFTs. With platforms like Magic Eden dominating the NFT space, Solana remains a preferred blockchain for creators and collectors. Additionally, its integration with major gaming projects has positioned it as a leader in blockchain gaming and the metaverse. Looking ahead to 2025, Solana's focus on fostering a robust developer ecosystem and addressing past challenges will likely strengthen its position. For investors, it remains a high-potential blockchain, particularly in sectors like gaming and digital collectibles. 2. Ethereum, ETH. Ethereum continues to be the powerhouse of decentralized finance, DeFi, and non-fungible tokens. NFTs. As the most widely adopted smart contract platform, Ethereum's influence on the blockchain space is unparalleled. One of Ethereum's biggest milestones was its successful transition to Proof of Stake, POS, in 2022. This move significantly reduced its energy consumption and laid the groundwork for continued innovation. In 2024, Ethereum's ecosystem saw explosive growth in Layer 2 solutions, such as Arbitrum, Optimism, and zkSync, which have drastically improved scalability and reduced transaction fees. These scaling solutions enable Ethereum to handle a higher volume of transactions without compromising security or decentralization. For DeFi and NFT users, this translates to faster, cheaper interactions, further cementing Ethereum's dominance. 2025 is shaping up to be a pivotal year for Ethereum, with the potential for even more advanced developments like proto-danksharding, EIP 4844, and increased adoption by institutions. Its unparalleled developer activity and strong community support ensure that Ethereum remains a cornerstone of the crypto landscape. 1. Bitcoin, BTC. Bitcoin, the original cryptocurrency, continues to reign as the gold standard of the digital asset space. 2025 will likely see Bitcoin solidify its role as both a store of value and a medium of exchange. The introduction of Layer 2 solutions like the Lightning Network has made Bitcoin transactions faster and more cost-effective, paving the way for broader adoption. For any portfolio, Bitcoin remains a must-have asset, offering stability and growth potential in an ever-changing crypto market. 2024 has been a roller coaster ride for cryptocurrencies, but it has also been a year of invaluable lessons. By understanding the trends, learning from past mistakes, and making informed decisions, we can position ourselves for success in 2025. Remember, the key to navigating this fast-paced market is to stay informed and adaptable. The crypto world waits for no one, so act now to secure your financial future. If you found this analysis helpful, don't forget to like this video, subscribe to our channel, and share your thoughts in the comments below. Which crypto do you think will dominate in 2025? Let's discuss. And as always, stay tuned for more in-depth insights into the world of finance, technology, and investing. Thanks for watching. I see you in the next one.